Ladies and gentlemen, good day and welcome to Q1 FY2024 earnings conference call of Techno Electric and Engineering Limited, hosted by Asian Market Securities Limited. This conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. Actual results may differ from such expectations, projections, etc., whether expressed or implied. Participants are requested to exercise caution while referring to such statements and remarks. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Suraj Sonulkar from Asian Market Securities Limited. Thank you, and over to you.
Thanks, Yashashri. Good afternoon, everyone. On behalf of Asian Market, we welcome you all to the Q1 FY2024 earnings conference call of Techno Electric and Engineering Company Limited. We have with us today Mr. P.P. Gupta ji, Chairman and Managing Director, and Mr. Ankit Saraiya, Director, representing the company. I request Mr. Shri P.P. Gupta ji to take through us an overview of a quarterly result, and then we shall question and answer session. Over to you, Gupta ji. Thank you.
Thank you so much. Very good afternoon to all of you, and we are really grateful that you have spared your busy time to be part of our conference. And I welcome everybody to discuss our financial results for the first quarter ended 30th June 2023. Anything said on this call which reflects our outlook for the future or that could be constituted as a forward-looking statement must be reviewed in consultation with the risk that the industry and or the company faces. Let me first highlight our performance for the quarter. Just to update what we discussed earlier, that our March end balance sheet was a little difficult balance sheet to understand because we exited one strong business of the company, namely wind assets in Tamil Nadu, and it was classified as a discontinuing business for the company by our auditors. Similarly, company created two subs to promote its two new business verticals, namely number 1 data center and number 2 AMI business. In both we have now in the process of setting up of the business. Still, they are not operational, nor they are generating any revenue or bottom line in their SPVs. So as such, I will like to say that our consolidated results do not reflect our complete situation. It's not a consolidation of operating companies or matured businesses. So as such, I retreat that our standalone results bring the true and fair operations and picture of the company, and the same may please be viewed accordingly. And while going forward, I will be discussing the progress on both the subsidiaries in addition to what we are doing in the parent company. Over the period, AMI has been...
I'm sorry, sir, there's some cracking noise coming from the line.
Yeah, right. My line?
Yes, sir. Give me a moment.
Yeah.
Go ahead, sir.
Yeah. The AMI business will become operational earlier than data centers because it is executed progressively by number of meters to be installed at number of consumer premises. So as many meters becomes operational, they become eligible for revenue accordingly. The total revenue of the company from EPC business in a standalone mode is around 343 crore in the quarter, which we highlighted by the last meet also between us, which is up by 135% year on year. We expect the similar level of revenue for the forthcoming quarters as well. As company is having a lot of business backlog now to execute and continue to experience same kind of traction in the market. The EBITDA for the company stands at 47.48 crore for EPC business. That is 110% year on year. EBIT for the EPC business is at 45 crore, up by 91%. The other income is at 30.64 crore compared to 15 crore nearly last year. The profit before tax is at 72 CR approximately, almost double of last year quarters. The PAT is at 54 CR approximately, which is 150% of the same quarter last year. There was a loss in the discontinued business operation marginally because of the expenses in winding up of the establishment, which is around 2.5 CR. And it is not comparable, but still the like-to-like, the profit was 14 CR in this business last year. The total profit for the company for the quarter stands at 51.3 CR, which is up by 42.6% year on year, and EPS is at 5. The current investment value in the books of the company is at around 1,500 crores, which is about 140 rupees per share. During this year, we have L1 status in active award of the contracts in transmission business alone worth about 1,500 CR, out of which we have already received a prestigious order of 350 CR from PGCIL, and another order, another business of around 500 CR from PGCIL is expected before September end, which are in various stages of approval, where we have been established L1 and competitive. Similarly, we are also placed L1 in business worth about 3,650 crores, apart from the order backlog of around 3,824 CR as of quarter one, unexecuted business, which largely comprises of 2 AMI orders worth about 2,000 CR, and rest is the transmission side. We have used bidding pipeline, and we are hopeful of bagging at least further business of around 2,000 CR, but we will like to assure you that as committed in the last review, at least 4,000 CR business will definitely be further achieved this year, and will close with the order backlog of about 6,000 CR by March 24. On the outlook is very promising. I will say that all difficulties of last 3-4 years are behind us, and as I said that the morning has arrived, and we now we focus on growth. That is what we are looking on. We expect the growth momentum has begun, but it will also not only continue for next 3 years, but it will also make up for the lost 3 years. we expect larger business out of transmission, AMI segment, and as well as higher technological solution applications in transmission due to larger injection of renewable power in the grid and also data centers. The FGD segment is a bit subdued because of the energy issues country is facing at the moment. Probably this is the first year when energy demand is going to grow in double-digit growth, which in the last 3 years, we have seen no more than 3-4% per year, or maybe stagnating growth. So Government of India has promised another thermal capacity of 30 to 40 gigawatt, but it will largely be brownfield and in PSU segment. We are also seeing strong power sector reforms as government desires to ensure payments to the generators, timely payments to the generators, as well as wants to contain losses of the DISCOMs strongly. The amendment to the Electricity Act, December 22, is also in place now, and central government is trying to take a larger role empowered out of the amendments, ensuring availability and reliability of power supply, as well as billing and money collection, last mile money collection out of the sale of power. The overall financial health of this sector is likely to improve in the coming years if this focus really stands implemented in more than latter, I will say in spirit also. While the focus will continue to be on the renewable power and addition of almost 500 gigawatt by 2030, as committed by the statement of our Prime Minister as well as Government of India. So we are, and to have injection of 500 gigawatt in the grid, we'll definitely need energy storage solutions like battery, BESS or pumping storage of no less than 5% of this capacity. And these will also have to be additionally supported by many kind of active reactive power management solutions in the grid. We see significant activities where your company is fully qualified and competent to provide solutions in this space, both to power grid or to any private player in this segment. And additionally, our business of doing off-site works or balance of plant works in the thermal powerhouse will also be somewhat back, but we have not considered in our order book or as an opportunity so far. The FGD segment continues to be a bit subdued at the moment, I will say, but a lot of work is still pending. The capacity, thermal capacity being largely in private sector, probably the owners believe that they may get more time over up to 2030 in future, so they are definitely reviewing and waiting for commodity cycle to be subdued further so that the solutions can be rolled back to sub 50 lakhs per megawatt as was happening 4 years back. Our order which we have got in Rajasthan is progressing normally. In the transmission sector, we will say that after a long gap, that the transmission sector is back. There is a TBCB bidding happening, which is not limited to 50 gigawatt now. It is larger than that, maybe 100 gigawatt or maybe 75 gigawatt or more. But a lot of bidding is in progress at the moment. And we are finding that every month 4 or 5 concessions are being awarded to power grid or to the private sector. The interstate transmission system for evacuation around 15 gigawatt of renewable energy from Ladakh has been proposed by the government with a central government support of 83 billion rupees with a capex outlay of around 20 billion. And we are already part of it at Draws and Nilgarh. The total bids open for transmission now submitted, I will say, is no less than 40,000 CR. And secondly, I will say that in the present networks, as renewable power is concentrated, is only 6 states in India, and rest of the states have to be fed by transmission networks only out of the generation in these 6 states. The substation allocation is larger than what we have experienced in the past. It is almost around 25 to 30%. So we can expect substation business out of this transmission business of 40,000 CR, 1.4 lakh CR rather, it will have substation business of around 40,000 CR by 2030. So we can at least hope to get business worth about 1,000 to 1,500 CR every year over next 3 to 5 years. As I said, we are already placed L1 in 1,500 CR in this segment first time after a lapse of about 3 years. And our presently unexecuted business in this segment is already 1,000 CR plus. The distribution side reforms are really flying in the country. I will say there is a lot of stress on RDSS scheme implementation in the country. Government have allocated 3 lakh crore for this scheme, and tenders are being called every passing week, and there is a strong focus on AMI system strengthening as well as on the intelligence upgradation of the networks installed in the system by installing a lot of SCADA, ADMS solutions additionally in the distribution management, as is being done earlier for the transmission networks. We expect business worth no less than I will say 2,000 to 2,000 CR out of this segment at least every year. We have already got, we are executing an order of 2.5 lakh meter in Jammu and Kashmir city, worth about 300 CR under DBF40 model, but under PMDP scheme, which is different than RDSS. And we are also L1 in 2,000 CR worth business for another 20 lakh meter supply in the state of Jharkhand and Kashmir itself. The Electricity Act amendment has given have promised, I will say, a choice of power suppliers as in case of mobile or internet services, but this is still to my mind a larger promise than reality. Let's hope that it happens. Similarly, there are promises on the open access also, and a lot of renewable power is being sold through the power exchanges as an amendment to the Electricity Act. So you can expect going forward that more and more trade growing in multiples in renewable power over conventional power in power exchanges. So it should, in a way, what could not be achieved by central government directly because of the concurrent list issue in power sector is being attempted to be achieved indirectly by intermediaries and also making consumer feel more comfortable and getting power at more competitive rates. The system also allows provisional or revision in tariffs so that electricity boards can also share their updating of the costs more frequently with the consumers through the regulators, and regulatory mechanisms are also expected to be ramped up and made more robust and pro-consumer more than the influenced politically as in the past. In totality, I will say that the power sector continues to be at a critical juncture as a uptake, which we have been hoping for last 5-7 years, and I'm very hopeful that something good is going to happen going forward, and which is visible now. The data center industry is growing multiply. The trajectory in the market is larger than we had anticipated, and I will also ask Ankit later on to add some more space to it. Is Ankit, are you able to hear me?
Yeah.
Can you speak out on data center influence due to artificial intelligence and what all is going on in your data center territory?
Yeah, sure. So just to give some idea about the industry, until today we all believe that cloud is the most prominent reason why that has led to the growth of data centers and demand of data centers, apart from other reasons such as 5G and many more. But then I guess over the last 6 months, the industry has taken a very dynamic shift, especially because of the way AI and machine learning has become more prominent. Used to be based on accepted it on day-to-day life, especially generative AI, what we understand as ChatGPT. So that has especially led to a change in the way infrastructure of data centers are thought over, designed, because as the world moves towards adopting AI on day-to-day basis, the requirement of infrastructure to cater to those kind of computing requirements will also change. And just to give an idea, I think it's expected that about $75 billion of investment will go into AIs, developing AI models over the next 5 to 7 years by all the companies involved in this sector. And to cater to that requirement, almost $500 billion of data centers are required by 2030. And this is limited to just AI. And it is I would expect that at least the Asia Pacific region should attract 20-odd% of this investment, and it can be more. But on the conservative side, let's say about 20-odd%. And India alone is in a sweet spot to attract nothing less than 30-40% of this entire investment in the APAC region. Given the kind of land bank we have compared to other countries in this region, and secondly, the renewable energy capacity that we sit on. Plus, very recently, last week, we to understand about the Digital Data Protection Bill, and I'm sure that is also further going to aid in demand of data centers, specifically in India, because it starts the journey of data localization, and slowly and steadily, hopefully, the data belonging to the Indian citizens, at least their personal data, will continue to reside in India. So that's the few developments that have been visible in the industry over the last 6 months.
Yeah, can you update on progress in Chennai project?
The Chennai project is moving smoothly. We are in the middle of the construction. It's at its peak. We should be able to complete the civil and structural works for the data center building in next 2 to 3 weeks' time, and then start focusing on the electromechanical works, which should take us about another 6 months to complete. Given the first data center, there has been a significant learning curve on the construction side, but we are well on top of it. we have not let it have any impact on the project itself. But there might be a little shift in the commissioning timelines, and we are hopeful that by December or maximum by March 24, we should have the first phase of the project commissioned.
Yeah, we are further to what Ankit has said. I will like to add that we are seeing aggressive interest from strategic investors to enter into a JV with us in this space, as well as either be partner or buy out our Chennai data center. We are evaluating the various options, and I am hopeful to conclude it before the close of this financial year. The wind segment, I believe,
we would be very happy if any of you would like to visit the project. We'll be happy to take you around the project at Chennai and around the different aspects of this data center.
Yeah, it's very strategically located and in a very beautiful pocket in an IT park called Siruseri in Chennai, in Mahabaleshwaram, very next to the very TCS campus for IT services. A huge campus they have, employing about 1 million people in that at Chennai. So we'll be happy to have you there. Closing wind segment, I will like to say that whatever money we realized, about 450 CR out of the sale of these wind assets, they all are part of our cash and parked in balance sheet. With this, I will now like to invite question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have our first question from the line of Sushil from Nuvama Wealth Management. Please go ahead. Mr. Sushil, please unmute your line. Since there is no response, we'll take our next question from the line of Deepesh Agarwal from UTI AMC. Please go ahead.
Yeah, good afternoon, Gupta ji and Ankit. My first question is it fair to say that difference between EPC segments console and standalone is primarily a data center execution?
No, it includes both now, AMI and data center.
Okay. So and the console number would be purely which is external, right?
Yeah, it's third party.
Because if we see the console margin in the EPC segment, that seems to have been dropped meaningfully. So what would have been the reason for decline in margin for external customers?
You see, Dipesh, that is not fair to look at it, because in AMI also we are doing a EPC business only for their utility, but mode of payment is little different than which we normally are offered in transmission segment on like-to-like basis. That is number one. Number two, the EPC work is only carried out by standalone basis by Techno, whereas AMI carries on with the funding, O&M, FMS, SLA requirement, contractual obligations with the utilities, etc. on like-to-like basis. So all expenses incurred in console, some expenses of like overheads, manpowers, and the related infrastructure costs, they continue to be part of the console as it is, and not purely allocated to each job in in our cost accounting. But coming to the comfort part, in AMI, as much the issue with us is the billing between the SPV and the parent. Since we have not raised a bill to the SPV, there is no capitalization of the costs in SPV level, which we want to align more or less with the revenue stream, which happens more significantly eligible in AMI because the revenue is per meter, per month basis for each lot of 12,500 meter. So the time lag between AMI subsidiary and parent is no more than 3 months to achieve a SAT, which we call scheme or a system acceptance test, and it gets built by Techno to SPV and SPV to the utility. But in data center, it's a wholesome asset you create like you do in TBCB for a transmission asset. So we want to create a billing only close to the revenue stream availability. Otherwise, you are out of pocket with GST costs. That is the larger difference between the two.
Understood. What would be the extent of data center revenue which we would have booked in the EPC business and also AMI business?
Roughly, you can take in data center, it is around 100 CR as a, it is cost to cost. Let me first put it.
Yes.
Data center case. But in AMI, we have already executed work worth about 60%, I will say. But not commissioned, as SAT did not happen earlier, which has happened now, and SAT billed in this month already. So in the case of our policy so far is that wherever we exceed 20% of the order value, we can bill it at a order value, till otherwise it continues to be at cost to cost. So that is how the books are billed accordingly. So in data center, it continues at cost to cost so far, whereas in AMI, it became pro rata to the EPC order value versus cost. So that is why in this particular one quarter only, you will find there is a gap in EBITDA of Concall versus the standalone because of AMI EBITDA getting off the books.
Okay. And what should be the margin we should look forward for the full year?
As I have already given a guidance, it should be 13% plus minus. And by March 24, you see the problems are all quarter on quarter. If you make an annual account, you will see that all these subs will be fully capitalized and fully ready and fully executed businesses. So these kind of ambiguities won't exist by March 24. But in quarter on quarter, it has impact, and this being the first quarter, it speaks a little larger impact, which will get neutralized in Q2. You will see in half-year balance sheet. And large at 100% by March 24.
Sure. Also, if you can help us understand what would be the execution timeline of the two AMI orders which you have got of 2,000 crore, which are L1, and the transmission order of 1,500 crores. Would they be contributing to your revenue this year, or they will start next year? And what should be our revenue guidance for this year and next year?
You see, this is a little difficult issue in our business as usual, because the pace of execution is always a partnership between the asset owner and a contractor or a EPC per se. But by and large, you can take even new business will be eligible for revenue booking this year, whatever new business we are getting in transmission. And AMI anyway will be complete by the end of the year, whatever presently we are executing. Now coming to L1 business, they are under RDSS scheme, where we get 27 months to implement the scheme all these schemes where we are L1 in AMI. So obviously the revenue this year may be very marginal out of those orders. But the scheme of 300 CR will definitely be completed fully in this year. And at least I will say we should be able to execute another business of 2.5 lakh meter out of this 2 million meter in this year additionally, I will say. But data center will be fully done up by March 24.
Okay, sure. So what should be our expectation in terms of EPC business revenue this year?
I've been suggesting 1,500 to 1,600 CR, but it may go above that.
Understood. This is including the data center business?
No.
Okay. This only includes AMI?
Right. AMI and third party transmission.
Understood. Okay. Thank you. Bye.
And FGD.
Okay. Thank you.
Thank you. We have our next question from the line of Shreyans Gatani from SG Securities. Please go ahead.
Hi, good afternoon, sir. So my question relates to the data center business. So last quarter we mentioned that we would be operationalizing the first part in September. So what changed in 3 months that we are pushing the implementation by approximately 6 months? And also you mentioned that you only recognize the EPC revenues after 20% completion. So does that mean like we are less than 20% complete on the project, or just trying to understand how that accounting works?
You see, the first phase of the project is always civil structural, and unless you have both civil structural works at clean premises, being a high sensitive application, the electromechanical work does not happen in tandem in progress. So you are right that there has been a spillover in completing the civil structural work due to rains or local factor, labor issue. So definitely first phase is now targeted by December, January, as Ankit has said in this presentation over it. And although we have committed a capex of about 450 CR by now, but the spent amount is like that, paid out amount. And we have to account revenue on a paid out value basis.
Understood. Okay. And just one more thing. So is the delay, do we still anticipate the same cost for the project, or is there any escalation on that due to delays, or just any color on that?
Well, there may be some saving rather, because commodity cycle has softened and lot more equipments are now competitively available than earlier. So in looking back, I will say that there may be a saving of 5%. No escalation on it.
Okay. Got it. And so when are you looking to have a partner in place? Like last time you mentioned that, you would give more color in the next call. So just trying to understand where that stands. Also, you mentioned that you might also consider selling the entire project out to some interested parties. So just wanted any update on what kind of talks are going on.
We are presently with a NDA in place and a cooling off period with one very large investor, and due diligence is in progress. We are not authorized to disclose more than this.
Good. Thank you. That's all from my end.
Thank you. We have our next question from the line of Gunjan Kabra from Niveshaay. Please go ahead. Mr. Kabra, please use your handset mode.
Thank you so much for the opportunity. Sir, I just wanted to confirm what's the kind of order book have we closed this quarter and the bifurcation of the total order book in terms of EPC and transmission, if you can specifically mention.
We have got one order of Concall from Power Grid for 350 CR already in hand, and another business, as I told you, of 150 CR is in board of Power Grid for consent and approval, where we are held L1 in RA and bidding. So those orders should be received by end of this month or maybe mid-15th September.
Okay. So what's the total order book right now?
About 4,000 CR plus minus.
4,000 CR plus minus. And sir, in the first on the segment of SGD of the 1,400 crores of order book that we have, how much have we recognized it in this year? How much have we recognized in this quarter? And are we expecting to recognize, as per your previous guidelines, most of it in this year only?
No, I never gave a guideline of most of it in this year.
In 1.5 year, I mean, this year and the next year.
It's a 2-year order. This quarter contains 50 CR out of this vertical. And we are hopeful of this state government is facing elections this year. If they support financially, we are hopeful of doing 500 CR this year. Otherwise, it may be little less.
Okay. Sir, are we also seeing any new order pipeline in this segment?
Yeah, there are, but it's a bit slow in decision making, sir. There is no urgency with the buyers, as it was visible 6 months back.
Okay. Also, sir, from the AMI segment, I wanted to understand that this order, which is of the Jammu and Kashmir order that we have got, it was supposed to get executed by December. So with so many smart meters, so wanted to know how does the model of revenue recognition, if you can explain, how does the revenue recognition happen? In what stage do we get orders? Like, for example, with so many smart meter projects being awarded in the last quarter, so what's the share that we are targeting? Because there are a lot of Genus is doing its own EPC project, and there are other big AMI players also getting huge orders. So how are we targeting and how are we placed, and how does the revenue recognition work in this model, if you can explain, in terms of accounting, also in terms of execution also. And also wanted to understand if there is a smart meter order getting tendered to the smart meter players, then what's the lag between the AMI players who are executing the project getting those orders?
You see, firstly, your questions are multiple within a question.
Yeah.
Booking in this segment, ma'am, as per the terms of the contract. Till such time you are eligible for per meter per month revenue from the utility, that particular meter is not considered eligible for revenue. So for that, a process is defined. That meter has to be installed along with communication modules having NIC card, gateway, and loaded with softwares called HES, MDM, which are further housed in data centers or on cloud as required by them. And they have to integrally work with the billing module of the utility, where consumer address is all configured properly. So, utility is able to bill that consumer, they will not give you approval as a SAT of that very meter. So it goes like that. Now, depending on the size of the order, a lot size is defined by it. There are a lot of crack noise, man. Can you check it? Yeah.
Ms. Gunjan, can you keep your line on mute when you're not speaking? There's some disturbance from your line.
I hope it...
You can keep it on mute when you're not speaking.
Yeah.
Yeah, and going forward, a lot size is defined by each utility in the order, the one we are doing for 2.5 lakh meter now to be over by December, the lot size given is 12,500 meters per lot. So that is how the minimum lot size is to be taken as a commission. So by now we have completed work for about 1.2 lakh meters already in Jammu and Kashmir, and will be complete by 2.5 lakh meters by December. And presently the pace of work is almost about, you can say, no less than 2.5 to 3,000 meters per day in installations. So this is how it goes. When our SPV is able to achieve SAT with the utility, it provides the same approval back to the EPC partner, which happens to be the parent company in our case. To be conservative, we want to align all this on back-to-back basis. Unless SPV is eligible for revenue, it is no good idea to book revenue in the parent company. That is how we don't bill to the SPV till then. So we bill out only when SPV becomes eligible for revenue for those many meters, which in August we have already achieved for 1 lakh meter already. And we are hopeful of achieving it for 1.5 lakh meter by September end.
Okay. Sir, also wanted to understand, suppose we have like 3 segments, right? EPC, which is FGD, and then we have transmission and AMI, and then data center. So if in some segment, if there is a slowdown in orders, say for FGD, is the employee capability fungible to cater to the higher demand which is coming from maybe AMI or transmission sector, or how does this work? I mean, in terms of employee cost or something, if you can explain.
Ma'am, in our industry, the manpower is intersubstitutable to a limited extent, not the whole of it, I will say. The specialists are meant for a given vertical only, whereas there are a pool of the staff supporting those specialists who can be deployed for multiple applications from one use to the other, like your staff like commercial, staff like vendor development, staff like HR, or even accounting, or tax compliance, or field management. You have a lot of flexibility, but not in the specialist role as conceiving a scheme, layout, detailing, and specifying equipment parameters. So that is a specialist role. So specialist role is always specific to the vertical, whereas detailing role, there is a lot of commonality.
Okay, got it, sir. Thank you so much and good luck.
Thank you. We have our next question from the line of Sarvesh Gupta from Maximal Capital. Please go ahead.
Good afternoon, sir. Sir, just wanted to understand this 7.8% consol margin that we have received in this quarter. So you said that some of it might be due to the AMI EPC third-party work. But X of that, how much it will be, sir? And how much is the AMI EPC third-party work that we have built this quarter?
No, I could not question. Your question itself has the answer to my mind. The console numbers are third-party work. You can take it. And expenses are wholesome, meant as an establishment expense, I will say, are wholesome, meant for all verticals of the company, including data center, AMI, EPC, third-party EPC, etc.
So how much is that, sir? I mean, I just want to understand that for our, if we remove the AMI and the DC, which you were rightly said are upcoming businesses and they might be in losses, how much for our regular EPC business, what has been the margin profile for this quarter?
At least 13% you can take. Another 5-6% is out of the AMI business.
Okay.
So you go by standalone, that will give you the true picture as I stated you. Because there the expenses are more appropriated than in a console level. Because console level, as I earlier explained to take away confusion, was that these subsidiaries are today non-operational. They are not generating any revenue. They are not owning any. They have not made any capex or capitalized any of the revenues. So that is why you find this ambiguity. They are not consolidation of matured businesses, operating businesses. They are still under installations.
So there is some OPEX in these two subsidiaries which we are booking, and that is why Concall is showing a much lower margin.
There is no OPEX there. It is all costs. In AMI, no billing has been done by parent to them, so no costs. In data center, some costs are directly incurred by them, some are incurred by the parent on their behalf. But costs are all taken as a out-of-pocket cost only with the third parties.
Understood, sir.
And of our overheads, establishments, finance costs, and other related costs.
Understood, sir. And sir, in this difference between Concall and standalone, which is around 72 odd crores for this quarter, how much is AMI and how much is data center, sir?
This is 95% you can take AMI, 5% data center.
Okay, because last quarter, sir, we had said that of the 540 crore of DC order, we had invoiced 120 crore last quarter only. So this quarter, why has it dropped to less than 510 crores?
That was all data centers, sir, last time.
Yes.
Because that is cost to cost, we have not preferred to book any costs.
Understood, sir.
Whereas in AMI, we exceeded 50% progress. So we prefer to take that in the books over the data center. Data center cost you will see happening in third and fourth quarter now.
Okay. And one question on the order book. So you are saying that we have 2,000 crore in AMI in L1 and 1,500 crore in transmission in L1. Is that right, sir?
Not L1, sir. I will say that out of which 350 CR in this quarter we have booked already.
Okay.
We have got the order.
So 1150 in L1 in transmission.
Right.
And 2,000 crore L1 in AMI.
Right. AMI precise number is about 2,350. That way if you take like
that. So around 3,500 crore we are in L1 basically.
Right. Absolutely.
And then so this 3,500 crore is in L1. 4,000 crore of order book we already have got. And then you have a bidding pipeline where you expect another 2,000 crore to come.
Right.
Understood, sir. Sir, the other question was that like in FGD, DC, so we are seeing delays, and as you mentioned that, the client side, they are also waiting for the cost to come down because of raw material prices easing out. So are we also sort of slowing down things from our side in both data center and FGD so that we can be able to procure at much lower prices and make higher margins on these contracts?
No, it is not fair to include data center into FGD because FGD is always a EPC business which is as much client or contractor driven. So it suits both to bring down the cost. But in data centers, we look for revenue. If it is overall IRR is good, why will you mind marginal extra cost on it?
Okay, because most of the cost there also will be your electrothermal-mechanical stuff. So those
sooner I complete and become revenue accretive, more value that asset has acquired. So why I will like to delay data centers?
Okay, understood, sir. Understood, sir. Congratulations for a good show and all the best for the coming quarters.
Thank you. We have our next question from the line of Abhijit from Yes Securities. Please go ahead.
Hello, gentlemen. My question is on the AMI business. So we are executing a 2.5 lakh order in J&K, and we are L1 in 2,000 crore, another order for Jharkhand and Kashmir. So, sir, I wanted to understand what is the total opportunity size that we're looking at going forward, maybe some other states coming up for ordering. So, in the medium term, like 2-3 years, what is the total opportunity size in the AMI business that we're looking at?
Sir, the Government of India has announced a target of 250 million meters. That is a very, I will say, ambitious target over next 5 years. So that may, and out of that, our takeaway is no more than 100 million may happen as far as our takeaway is. So we are looking for no more than 5 million out of it, considering next 3 years.
Okay. So we are looking at a number of 5 million over next 3 years.
Order book over 3 years to be executed hence over 5 years. You take it like that.
Right. And sir, right now what I can see is we are present in J&K and we are also like L1 in J&K and Jharkhand. So these are 2 states. So some other states that we are looking at penetrating into this AMI business?
Yeah, we are definitely looking on more prospective states.
Right.
Their bidding is still pending. And now states are also learning how to harness more potential out of smart meter, more than merely use smart meter for revenue billing or energy billing.
Right.
So this subject will, upgrade as an application going forward technologically.
Right.
So it will go beyond meter in capability. That's what I am trying to say.
Understood, sir. Also, sir, on the data center business, we talked about 2 options. One is to be a part of a JV or something, and the other is to completely sell our interest in the asset. So, sir, what is the thought process behind this? Do we want to be a part going forward in the asset, or we want to completely sell it off?
Look, ultimately, we are a EPC company by core. Our idea is to develop data centers for ourselves as well as for third parties. The first data center we took up, as told earlier in various meetings, to prove that Techno is capable of doing a EPC in this space, which was not accepted by foreign, I will say, entities, because we had never done work in that space earlier, like L&T or your this Bombay company, which is क्या नाम था कंपनी का बॉम्बे में? अंकित क्या नाम था कंपनी का बॉम्बे का यार?
I'm sorry, sir. His line is disconnected.
Oh, in Bombay, this. Yeah, I'll come back to you after some time. Your name goes out of your mind. Sterling Wilson, These 2 were the leading companies in data center space earlier. So both have become relatively lukewarm in this space because they are not very large value and they have multiple faculties as engineering to be handled additionally. And requirements of the owners are very stringent. So that makes good business sense for Techno to be in. And we were keen to prove that. So that is how it is. So we don't mind. For us, both opportunities are alike. Whichever gives a higher delta, we'll opt for that.
Okay. But we are also looking at it as a sustainable EPC business, the data center piece.
Absolutely. Going forward, that is the goal also.
All right, sir. Thank you for answering my questions. That's it from my side.
Thank you. We have a next question from the line of Navin Vijay from NS Capital. Please go ahead.
Sir, my question is on the data centers. Unfortunately, Ankit looks to be disconnected. But I just wanted to know, is there any other location apart from Chennai where we have bought the land and started breaking the ground, sir?
Not yet. We are awaiting land allotment and handing over in Kolkata next, and we are heading to have a data center in Hyderabad, the next location. So we want to do around 250 megawatt as we have announced by 2030, and we are finding it is feasible to achieve this target. And even Tier 2 cities are getting popular now with IT companies. So that will obviously give us a choice also to be there.
Got it. And my second question is on the AMI business, where there seems to be some additional receivables that might get added on if we start the platform kind of a business. How do we plan to tackle that, sir? Do we do discounting with the financing company, or is there any strategy that you have thought on that, sir?
Yeah, at the moment we intend discounting only with a finance company, or we have our own lot of cash to deploy. We will see how competitively we are able to achieve that role. And even investors are approaching us to invest in our AMI to acquire majority position like GIC has done with Genus or Polaris have done with some Gram Power. So those investors are approaching us also in the market. Let's see how it pans out.
Okay, and my last question is on the FGD business. It seems to have lost a bit of traction because the deadlines keep getting postponed. So how do you see that going forward, sir?
No, it does not impact us per se financially, because all contracts have its own price variation clauses, time overrun compensation clauses. So we'll deal the situation as it evolves appropriately.
Thank you, sir. Thanks for all.
Just a note, Mr. Ankit Saraya is back on the call. If you have any questions, sir, you can go ahead.
Gupta sir has answered the question. I will get in touch with Ankit regarding the site visit to Chennai if possible. Thank you both.
Sure.
Thank you.
Thank you.
Ladies and gentlemen, that was the last question for today. I now hand the conference over to management for closing comments. Over to you, sir.
Yeah, you see, it is always saying, closing is always a painful word, I will say. I will only say that from current quarter onwards, you can expect a top line of 400 CR minimum, if not 500 CR in last 2 quarters, as we anticipate. And as I stated again, I will repeat, the sunrise in Techno Electric has happened, and future is definitely larger than we could have ever believed. This market will be visible to us or available to us, which was illusionary for last 3-4 years, I will say. So a lot of new wave of growth is there in Techno now, in this space, high-end space, and we will be announcing more technology-based solutions which this sector will need, and we will be part of it other than multinationals. So thank you all for joining the conference call with us. In case you still have any queries related to our growing journey in this space or performance, please drop in a mail to us, and do visit our office whenever you are in Kolkata or in Delhi, or anybody wants to visit our data center at Chennai. So we'll be very delighted to host you. Thank you very much.
Thank you. On behalf of Asian Market Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.